Hey folks, this is Paul Sampson coming to you from DataDash, and we just recently saw Bitcoin crash all the way, not necessarily just from 96 to 99,000 down to $86,000, but realistically up, from the highs of $110,000 just a few weeks ago, really about a month and a half ago, 35, 40 days ago on January 20th, we were sitting at $110,000 all-time high, and then now we've seen Bitcoin come down as low as 86,000 around the time of recording this video. And folks, this is a really key region that I've been touching on my only two videos so far on the channel. And as you can see, it's one of the only levels I have marked out on the chart here, obviously for Bitcoin. And it holds a couple of, key areas of confluence for me. And, one of the things that I'm going to discuss here, and if you are new to my trading style and techniques, I utilize a couple of modern tools, things like the fixed range volume profile, utilizing range data based on volume, utilizing certain harmonic patterns, which are sequences of Fibonacci's, which have certain, specific ratios to see them complete in, and then have specific targets after that. And then on top of that, just, utilizing just really, almost any form of, technical analysis and really all merging it together. And I really do just want to, admire the fact that, not only, yes, we came down to a key region, and to me, it's a very technical move, and we will cover it, really well today. But one thing to just really appreciate almost is that even though this was not a sizable move, to fall from $110,000 down to about 86,000, was not even really a sizable move when we look at it. It was about a 22% move so far, unless it gets a little bit, a little bit lower than that. But the crazy thing is once again, you're talking about from 110,000 down to 86, which is about a $24,000 move. And if you think back to the times like when myself, when Nick, when Cassie, when Ryan, even, when we were all in the market back in 2017, for example, probably the greatest bull run in my opinion, we saw Bitcoin top out at $20,000. And over the course of just about 35 days, we just unraveled, $4,000 more than what the market topped out at, several years ago. It's just incredible how this market is evolving, and we're, just kind of watching it unfold. Another interesting, thing about this recent drop is, aside from a few little scares in the market and potential, tariff, woes and things of that nature, there truly wasn't, any grand news catalyst, at least, in my opinion, that, overall, gave reason to the pullback here, right? Aside from in the technicals. So that's a very interesting thing, because generally we see at least, we'll see some news kind of, align with everything, and kind of will expedite and, prove to be a catalyst at times, right? But we did not see that. So in today's video, we're going to cover the key regions we want to see Bitcoin reclaim for any more upside, our line in the sand currently for any more downside, and what that may look like. I'm going to take a look at, once again, Ethereum. We looked at that last week a little bit, Solana potentially. And then we'll probably wrap up the video with a look at the S&P 500 as well as gold also. So I'll give my outlook on those two as well. So be sure to grab yourself a cup of coffee, whether it's hot or ice, because I've got a jam-packed video for you once again, and let's just jump right on into the charts. All right, so Bitcoin, once again, comes down $86,000. A couple of key things to note here, right? So we've been obviously ranging around in this region since, the end of November, so the better part of 3 months, which realistically, we've seen these ranges time and time again at this point. We've, zooming out to, just this entire bull run, and I'll just go ahead and take that off there. But when looking at, the overall, low from 2022, our $15,000 FTX collapse low, we've got a nice little impulse move up here, but overall we range sideways, really boring when living through it. Most people look back to it now and it's, not really much. It's a blip. It's a, a far memory at this point. But this was a very long time to be, going through the market, right? This was about 6 months right here, from about March of 2023 all the way to, Q4 of 2023. And then that was at a time where, most were anticipating 24 to be, a pretty rough year, the markets that collapse and all these things. And then, for everything to just kind of continue higher. You got that next impulse move to the upside. Brings us actually up exactly 1 year later, from March of 2023 up to March of 2024. We get yet again another sizable range for several months, which, really just kept people fearful, excited, and fearful, and excited, and very fearful. And then obviously we got the breakout continuation, another little impulse move to the upside, a little bit of a smaller range so far. Maybe we get, almost the same exact time where we do just get another couple months here of range bound activity before we break one way or the other. But at the end of the day, really actually a strong, healthy market still in the zoomed out perspective. And all we've done here is come down. I've got a couple of reasons why this is a really key region here that we're going to cover here in a second, and two of which the quarterly pivot and the 382. I've covered these, pretty well in the past 2-3 videos I've been on here. I'll cover it again. Every session of data that we have, whether that be a daily, a weekly, a monthly, a quarterly, a 6 month, a yearly, whatever the case is, each of those time frames are a session of time. And generally, just like a moving average, a 200-day, a 50-day, there is an average of price of those sessions. So for yesterday, there's an average of price that is likely to be met in the following session. These averages are known as pivots, and generally we look to them. Like I said, if I'm looking at yesterday's average, that's a area where I'm likely to be met in today's price action. I have one for last week that's likely to be met this week, one for last month likely to be met this month, so on and so forth. It's not a guarantee by any means. It's just like anything else. One thing alone is just a standalone, area to be looking for. But when we can build some confluence around it, that's, when these things really do come into mind. And unlike a 200-day or a 50-day or a 21, EMAs and moving averages and all these things that are dynamic and constantly moving, these averages do not move. Once they're set, they're set. And can be a blessing and a curse depending on how you want to view it. I always give the example of XRP, and we'll come back to XRP as far as the analysis goes here. But we started off the quarter this year with a new quarterly, a new 6 month, and a new yearly pivot, which once again, high time frame averages of previous quarter, previous 6 months, previous year, likely to be met in those time frames. So one of which being the quarter. And generally, we saw a nice little top off right here on that 337, and then we had that very quick move. And a lot of times we get it like a very fast, quick move down to those moving averages, that get people really worked up, really fearful at those lows. When in reality, all that we're doing is returning to the average, a mean reversion play. For that example, once again, looking at that 337 high all the way down to the $1.80 low, which was about a 50% retrace. But like I said, nothing but a simple mean reversion down to the average, get the bounce, and here we are. Now, as far as Bitcoin goes, that quarterly average, the average of price from last quarter, likely to be met this quarter, which we're about 6 weeks, 7 weeks into this quarter now. So the farther you get into the session, and a lot of times we do end up meeting it around those time frames. So this one is one that just happened to be a pretty spot on area at the moment. The key here is that, we have to start looking for, the areas to reclaim for any more upside and things like that, right? So unfortunately, I can't just say this is, the absolute low and, we're going to see, complete upside from here. However, I do think that this is a contender to be, a decent low here. And I'll once again explain why here. The confluence of, once again, these three regions all meeting. For anyone just listening to this, it's 86,881, that area. It is the quarterly pivot, so that's the average of price last quarter. So we've come down to it. We came down to it pretty aggressively here. Usually we do. And so far we're getting a decent bounce from it here, right? I've got the 382 marked out here as well. So just a little overview on that. When looking at Fibonacci retracement areas, which I've got a video that covers, Fibonacci retracement on, standalone here on DataDash. But as many other traders and analysts, you'll constantly see us utilizing the Fibonacci retracement tool or expansion. And generally, these are areas when looking at certain pieces, certain areas of the chart. Basically, you're dissecting a specific zone that could be looking for a pullback or an expansion. And a lot of times you're looking for these key areas. You'll hear the term gold pocket, which is a 61.8 to 65% retracement of a set area, not necessarily a 61 to 65% retracement in total, but a 61 to 65% retracement of a given rally at the end of the day. So at the same time here, right, we have basically, I'll go ahead and showcase here, right? So a lot of times when you have a really strong uptrend or downtrend, you get a shallower retracement, and a lot of times you find a really decent support and then continuation, whether up or down, from the 382. So instead of looking for a 61 to 65% retrace, we're looking at a 38.2% retracement. And I always show these as an example right here. This was a 382 retrace and then continuation, 382 retrace, continuation, 382 retrace, then continuation. from the overall low up to our 74K high last year. We had once again a macro 382 retracement right here at around that 51 area. Obviously it wicked a little bit below, so it's not exact, but overall on a daily closing basis, by and large we came down. Got a sizable reaction off that, and then we got our continuation to the upside. Mind you, we still had a little bit of time here. It wasn't just a straight rocket ship from there. And prior to this today, essentially, when noting that we had our quarterly pivot sitting here at about that $86,800 area, if we were to take a Fibonacci retracement tool from the current swing low of about 48,000 back in September, and we bring it up to our $110,000 high, you can see that once again, Bitcoin has now come down to our 382 retracement area, sitting at about $86,700 zone. A little bit of a wick through there, right? Nothing too crazy. And for me, I'm looking to see how we close, the next couple daily candles, seeing if we hold that as support, and then we'll look for a little bit more of a aggressive, confirmations here for more upside. Now, the third piece of this, which is giving me a little bit more confluence to why this was a big area to look for, was once again, there was a harmonic pattern that showed itself up here at the highs, which was a bearish reversal pattern. So a sequence of Fibonacci, which I'll get into, how to identify these, how to utilize these down the road. But we did discuss this in our previous video, so I just wanted to kind of highlight it once again. Bearish reversal pattern, takes the lows, take the highs, right into a nice bullish news. At the time, this was on inauguration day, we had all this bullish news that was popping out for crypto at the time frame. And at the end of the day, this is a pattern with three specific targets to the downside, and all I'm doing to gather those are pull a Fibonacci retracement from this level to this level, and that gives us a 0.5 area, which comes in about 99,500, which is was met pretty early on in about the 27th of January. Once you lose that level, there's no golden pocket support. It's usually straight to the 886, which was about 91,500. And then as long as you stay below 99,500, right? So as long as we're below this region here, which is why I said this was the line in the sand last week, for any more upside, it would look to invalidate the rest of this move. As long as we were below 99,500, we had to anticipate the final target of this, which was 86,431, the 113 expansion from this high to low. And at least so far, this was actually just about exactly where we came down to and bounced from. So there's just a couple things just all stacked up right here in that region. So as far as looking for any more upside, we'd really want to see this level held as support, not really losing that on a daily closing basis. Here locally in the next few days, we may see a little sweep of the low type of deal, which we get a lot of times when we get these big liquidation events. But overall, we want to see daily closes above that region there. And then the next area I'd like to see reclaimed is essentially exactly where we are right now. So it's our January low. Right, so not only did we just come down, meet all these key levels, but you came down once again. And when you're looking at a simple sense of liquidity events here, we just came down and swept all the lows for the whole last 6 weeks, right? All of February going all the way back to January. So anybody that had a long position just got liquidated, just got taken out, stopped out, whatever the case may be. And now generally that sets up a move to the upside. And everyone that just got stopped out re-enters their position because they don't want to miss the move. Whether or not that takes us to new all-time highs or just even back to 95,000, 100,000 is the question. But that is the region I want to see held for the time being, this little box zone realistically. But 89K, if we start to hop above there and start closing dailies and get going out of this region, I think there's a really good chance that this could be our pretty substantial low on Bitcoin. And over the next few months, I think that we could run it back, and towards the summertime see some new all-time highs once again. So from this region, coming back up to the 110, into the $120,000 area. And then speaking on what are we going to look for in case of downside from here, I mentioned once again that I utilize range data based on volume. And here, once again, I'm utilizing tools such as the fixed range volume profile, which allows me to look at all the traded, transacted volume of a certain area of the chart once again, right? Very similar to taking a look at the Fibonacci retracements of a certain given point. Here I'm looking at last quarter, right? So this is the quarterly range of Bitcoin. So, and what you see in the lighter area here is the value area. This is where 70% of all volume occurred during this time period. Obviously there was some down here in this region as well, but the majority happened up here, and this is what's known as our value area, our range, our value area low, our value area high. This higher node here protruding with the white level coming through is our point of control. You'll hear that quite often as well. And overall, at a high time frame glance, if we are to start closing below the quarterly pivot, our high time frame average of 86,881, then I think it is likely that we run this range to the bottom, right? So, and that does come down to about 80K, and then we probably have some other issues that we have to look through, right? But as far as we are holding at the moment, there's no reason to overlook this region of 86,881 to see if we get that reclaim of January's low and potentially run it back to new all-time highs. Now, once again, I want to take a quick look over here at the Bitcoin ETF inflows and outflows versus Ethereum. Because it's very interesting once again. So we have yet again another day where we have a sizable outflow of Bitcoin coming in at about $559 million of outflow, meaning, essentially investors and institutions are selling. And yet we have an inflow net of 1.61 million in ETH. So while Bitcoin is being sold off, pretty hard, ETH is still holding consistently with net inflows, whether it, just be a few $1,000,000. I know that's nothing to really ride home about. But it is interesting to note because once again, we've looked at that on our latest video as well, and pointing out that there may be a shift occurring on a macro level where, investors and institutions are shifting over and, changing their positions a little bit and shift, rebalancing their portfolio, so to speak, in a sense that more favors Ethereum in the short, short to midterm here, I'd say, over the next coming weeks to months, where we could see Ethereum, potentially outperform Bitcoin, which is something that I've been very keen on seeing, probably between now and into the summer and then definitely into the end of the year. All right, before we take a look at Ethereum and continue the deep dive into today's analysis, I want to quickly highlight something that's been catching my attention, especially as a content creator in the trading space. If you ever struggled with finding the right collaborations or maximizing reach as an independent creator, you're going to appreciate this. Chirpley Ai is changing the game when it comes to influencer marketing. It's an AI-driven platform designed to connect creators with brands in a way that's fully automated and efficient. No back and forth negotiations, no wasted time, and what's really cool is that they focus on micro-influencers, making it easier for both brands and independent creators to find partnerships that actually make sense. Now, Chirpley is going to be launching their native token soon, and this isn't just another token. It's directly tied to the utility of the platform. It'll be used for transactions, governance, and streamlining the entire collaboration process. So instead of relying on traditional payments, creators and brands can settle deals instantly using this native token. It's a move that brings real functional value to the space, and as someone who's constantly working with sponsorships and brand deals, I can see that this simplifies things in a big way. So if you're a creator looking for better ways to connect with brands, or even a project trying to get real organic reach, Chirpley is definitely worth checking out. So I'll be sure to leave a link down below in the description area so that you can explore more of what they're building on your own time and see if you're a good fit for it. Now let's get back to the charts. All right, so on the last update on Ethereum, we were just trading sideways here on ETH, sitting at about $2,700, $2,600, $2,800. And we were noting that, the key regions here, right? So we already had a pretty sizable downfall on that last drop to about $2,100. And I noted that, when you see these kind of moves here, a lot of times you'll at least get a retracement down to your gold pocket area. The 886 is usually one I look for as well. It's a little bit past the 786. Generally, this sets up a pretty nice harmonic pattern at times. So it's a really big area that I look to a lot of times that I think that most tend to overlook and get a little fearful when we start to pull back to those levels, because it's just about a 90% retracement, almost a full-on retrace there. But it is a key region there. And so far we have come down and met the gold pocket with a sizable bounce here. So really going to depend on how the market reacts as a whole. Bitcoin needs to reclaim that $89,000 area, and then we're looking for Ethereum to kind of climb out of this region. The key areas down to the downside still really do remain that 886 level at 2174, in case we do get another rollover here. And then for me, just zooming out and looking at the fact of just, as a trader more than anything, we don't necessarily have to see this, but it's just interesting that we haven't. We've come down and just, kind of just front ran these lows, twice now. Granted, these have been 50% retracements. By and large, this could very well be the lows. You got a higher low now. See if we get that, reaction out of here. I'm not saying to just, hold your breath for a potential $2,000 or less Ethereum, but that would be my, my biggest opportunity zone, I suppose, right? So if we were to see Bitcoin, tend to roll over, maybe come down to that 80K, the area I'd look for ETH is going to be sub 2,000, but there's reasoning behind that, right? So one is it would come down and take all the lows, which we do look for that time and time again, a liquidity sweep if you want to call it, and then we have a yearly pivot sitting there untapped. Just like those quarterly pivots, that tend to get met in the following quarter. That yearly is, got a high likeliness to be met this year. Once again, not exact, not a guarantee, not something I'm looking to hold my breath over. But if we do come down to that, I wouldn't be fearful at that region. That would be actually an area I'd look to really, heavily pick up some Ethereum if I had the opportunity. And if not, vice versa, if we do see that level met and, you're out of cash, a lot of people don't necessarily have, all these funds to constantly buy dips and, constantly moving their portfolios or taking profits. And if that does occur, just know that that's a really big area to see technically, and I wouldn't be afraid of it if it came. Really wouldn't break anything in the grand scheme of things. Obviously, we'd have to see how things look with Bitcoin and everything at the time. But for now, nothing's broken. Gold pocket met. Got a nice bounce out of here. Looking to see if we get continuation to the upside, both on Bitcoin and then obviously with the altcoins as well. We've got a weekly naked point of control, which is a volume target derived from a fixed range volume profile. Once again, a weekly range data. That's left over here. So a lot of times we'll see these, revisited as well, very similarly to those pivots. And this is probably the area I'd look to see the reclaim, right? And this is a sizable ways away, right? It's $1,000 move. But if we start to come up and live above this region here, I would say that's a little bit more of a confirmation that we're going to, continue higher here, right? And then that, may have been the low and so on. From this area, either way, I'm anticipating a move to attempt that all-time high here for Ethereum pretty soon at 4,900, that 5K area. And then we'll see if we get that, price discovery. Just want to take a quick look at Solana here. It had a similar setup as Bitcoin did. We had a bearish harmonic pattern, that bearish shark reversal right at the all-time high, right at the same day as Bitcoin did. 3 specific targets. We were covering this the last video as well. The 0.5, no gold pocket support, right? You got the 0.5 right here, straight to the 886 second. Kind of, trended sideways for a bit. Front ran the 113 here. Overall, was looking for this zone anyhow. A couple of volume levels down here as well as the overall shark target. So looking at Bitcoin here, once again, seeing if this is a region where we're going to start to get a reversal out of this zone. For me, not the first thing I'd rush into would be Solana, but, if you were looking to be a buyer up at these areas here, you have definitely got an opportunity to 55% discount at these current levels where I could see this, end up being a zone where we get a decent reversal out of, whether it be back to all-time highs or at least back to $200 region. So I am anticipating a decent little, bounce up out of this region on Solana. XRP is a pretty simple outlook, pretty much the same as it was. We got that initial drop down to the high time frame averages back on February 4th. Nice little sizable bounce here. Pull back right into that little region I was looking at, similar to ETH, the gold pocket, the 886 zone. So we got a nice little, bounce so far off of that gold pocket. And then just same deal, looking for, potential reversal out of this area here, taking us into the new highs. And the next areas I'm looking for, on XRP would be 370, 489, and 681 over time. Now, if I have it my way on Bitcoin and we get this, continuation up now from this key region we just came down to, that $86,000 level, and we reverse back up to new all-time highs, I have to imagine the S&P 500 come with it. This is the SPY, which is the ETF that, basically runs off of the S&P 500. We've just seen constant highs and, higher highs and higher lows across this, entire time frame here. And they, get a little bit smaller moves here in the stock market. And we did get a pullback here, similar with everything else. But overall, still really nothing to, really be fearful about here, right? So if we do continue lower here, we've got the key levels here for support. Looking at 572, we've got a quarterly naked point of control, so one of those volume targets. We've got an untapped yearly pivot, so one of those high time frame averages of price. And then overall, you got your gold pocket. So if we were to come down into these regions, these would be the next major supports to look for that next major, reversal or support bounce from there. Otherwise, nothing really broken here either, right? Higher highs, higher lows, continuation to the upside is kind of the name of the game here on the S&P 500 until we really start losing some of these regions. And the biggest one, continuing any lower, so we're kind of in an area of, little I'd say bullish until otherwise, and that otherwise starts when we start losing 550. Because once again, that's, when you look at a 200-day, a 50-day EMA or an SMA, like, you look at it as bullish above and bearish below. This was last year's average, 365-day non-moving average. So bullish above, bearish below, right? So lose that area, even though we got the gold pocket, where it's something you want to look for, quick little dip into and claim that level. But start closing below that 550. And I would say we got more of a bearish trend probably starting to unfold by then. And then we've got gold. So another one that's just, constantly making new highs right now, which is very interesting. Realistically, until we come back down, and you could very well just even see a support bounce back off that previous high. We've got this red line coming in right in here, and that's a VWAP. So that's a volume weighted average of price for the quarter. So a little bit more of a dynamic moving average there, lining up right nicely with the all-time high, the 2024 high, I'm sorry. You got some room even to come, back towards about that 27.89 and hold that level and still see continuation to the upside, or we just continue from here, right? So far you still have a really bullish outlook here on gold, where I could see it reaching 31.78 to 32.18. Right, which is a trend-based gold pocket here above. Where things start to look a little dicey is when we come back below, and if we start losing that 2024 high, so come back down below 27.90, there's a huge, stack of levels right here that would give me, that would lead me to assume that we're going to come back and challenge some of these areas before that next leg up. And same thing, it's just a slew of confluence here with some really key areas, high time frame averages, retracement areas that are likely naked points of control. You have 6-month pivots, yearly pivots, yearly open, untapped monthly levels. It's just stacked basically between 2400 and 2600. So for now, I don't think anything's broken here with gold either. I think that you can still anticipate more upside, even if we do see a pullback down to about 800. That's kind of the line in the sand for any more aggressive downside at that point, and then we probably look into this box. But otherwise, yeah, looking up to about 31.78, 32.18 over time for the next major target here on gold. All right, folks, that is all I have for you today. I hope you all enjoyed this video. I know I did. If you like the content, be sure to give us a like, subscribe to the channel so you don't miss out on any more incredible videos and analysis like this. Please be sure to check out our friends Chirpley down in the description area below. And with that, I wish you all an incredible remainder of your day. I'll see you all in the next video. And until then, everybody, cheers.